Every market cycle gives us a moment, that narrow window when fear dominates headlines, volatility tests investors, and quiet opportunities emerge right under the surface. Right now, as November begins, we're standing at one of those moments. Rate cuts are on the horizon, AI and biotech innovation are accelerating, and capital is once again starting to flow into growth sectors that had been left for dead earlier this year. The smartest investors aren't waiting for confirmation, they're positioning early. In this episode, we're diving deep into 3 stocks that could shine as this new leg of the market begins to unfold. Pfizer, Arista Networks, and CoreWeave. Together, these 3 sit at the crossroads of AI, healthcare, and infrastructure, 3 of the most powerful megatrends shaping 2025 and beyond. So, buckle up, because this isn't just another stock list. This could be your early entry into what might become November's biggest winners. 1. Pfizer, ticker, PFE, the comeback of a giant. Pfizer has spent the last 2 years quietly rebuilding after its post-COVID slump, and right now, it might finally be at the tipping point of a comeback. The stock has been beaten down, trading near multi-year lows, but that's exactly what creates opportunity. The company is pivoting hard away from pandemic dependence and toward long-term growth drivers: obesity drugs, mRNA technology, and next-generation vaccines. Just this week, Pfizer filed a new lawsuit against Metsera Incorporated and Novo Nordisk AS, accusing them of anti-competitive behavior in the weight loss drug market, a market projected to hit $150 billion by 2030. This move isn't just defensive. It's a signal that Pfizer intends to compete aggressively in one of the most lucrative pharmaceutical segments of the decade. In addition, Pfizer and its partner BioNTech have submitted a new vaccine application targeting the upcoming 2025 to 2026 season, specifically the LP.8.1 strain. It's another sign that their vaccine innovation engine is far from slowing down. While COVID-related revenues have dropped significantly, analysts argue that Pfizer's underlying R&D pipeline is being undervalued, from cancer therapies and RSV treatments to obesity and cardiovascular breakthroughs. The stock's valuation has compressed so much that it's now trading at a forward PE near 10, far below its historical average. For long-term investors, that creates a classic high-upside, low-expectation setup. If Pfizer's next round of trials deliver results, or if it secures an early foothold in the obesity drug race, the market sentiment could flip fast. This isn't the hype phase anymore, this is the rebuild. And when big pharma names rebuild successfully, they don't move 10%, they often move 50 to 100% over a few years. For anyone with a long-term horizon, Pfizer may be one of the most overlooked comeback stories going into 2025. 2. Arista Networks, ticker, ANET, the backbone of the AI data revolution. If there's one company quietly powering the entire AI infrastructure boom, it's Arista Networks. While names like NVIDIA and AMD steal the headlines, Arista is the company ensuring that all that AI power actually connects, communicates, and scales across the cloud. They're the unsung heroes of the digital backbone, providing the ultra-fast networking architecture that keeps data centers alive. This month, Arista unveiled its new R4 series, an 800G networking platform specifically designed for AI and machine learning workloads. That's a massive leap. It positions Arista as a direct enabler of the next wave of AI-driven compute centers being built by companies like Microsoft, Amazon, and Meta. Their upcoming Q3 2025 earnings report due November 4th is already drawing Wall Street's attention, with analysts expecting around $2.24 billion in revenue and 72 cents EPS. If the company even slightly beats those numbers or provides stronger forward guidance, Arista stock could break out into a new all-time high range. The stock has already climbed impressively over the past year, but many analysts still argue that the AI data demand cycle is just beginning. Arista's enterprise and cloud customer base continues to expand, and its margins remain healthy even amid supply chain constraints. What's most striking is that Arista isn't just chasing short-term AI hype, it's building long-term infrastructure that every AI company will need to survive. In short, AI runs on GPUs, but GPUs run on Arista. This makes Arista one of those rare picks and shovels plays, companies that win regardless of which AI platform dominates. With data centers scaling to record power usage and hyperscalers investing billions into connectivity, Arista's demand curve looks extremely strong heading into 2026. But here's the urgency. As earnings hit this week, any surprise to the upside could spark institutional buying. If you wait until after that, you may be chasing momentum instead of capturing it. 3. CoreWeave, the dark horse of the AI infrastructure race. If you thought NVIDIA and Supermicro were the only names benefiting from the AI boom, think again. CoreWeave is one of the fastest-growing AI infrastructure companies in the world right now, and while still private for most of its history, it's now rapidly expanding its public footprint, and institutional investors are taking notice. The company recently made headlines after securing a $14 billion deal with Meta Platforms to supply AI computing infrastructure. That's not just another contract. It's validation that CoreWeave is becoming a critical player in the AI supply chain. And it doesn't stop there. CoreWeave just announced a $6 billion investment in a new AI data center in Pennsylvania, targeting up to 300 megawatts of power capacity. This facility will be one of the largest of its kind in the country, coming at a time when AI energy demand is skyrocketing to levels few predicted. The company's expansion strategy aligns perfectly with the ongoing wave of AI adoption, and its partnerships with hyperscalers like Microsoft and OpenAI are deepening by the quarter. But let's be real, CoreWeave is not a risk-free play. It's high growth, high capex, and highly dependent on large contracts. Analysts have warned about its leverage levels and the concentration risk from key customers. However, that's exactly why the upside potential is so enormous. When high-risk names execute well in early-stage hypergrowth cycles, their stock moves can be explosive, sometimes tripling within a single market expansion. For investors with a tolerance for volatility, CoreWeave could be the asymmetric bet of the AI infrastructure space, the kind of name that can make portfolios outperform if the AI cycle continues to accelerate. November isn't just another month in the market, it's a turning point. With rate cuts expected in early 2026, capital is shifting back toward growth and innovation. The smartest investors are rotating now, not later. Pfizer represents stability and rebirth in healthcare innovation. Arista Networks is the essential infrastructure layer powering AI's expansion. And CoreWeave is the wild card, the explosive growth story at the edge of a trillion-dollar AI revolution. Whether you're a conservative investor looking for long-term recovery or a high-risk trader seeking exponential upside, this trio offers exposure across 3 unstoppable megatrends: healthcare, cloud networking, and AI infrastructure. Timing is everything, and the timing right now looks powerful.